Welcome to the More Realtors St. Louis Real Estate Market Update for July 2012. I'm Dennis Norman, one of the brokers at More, and if you'll give me a few minutes of your time, I'll bring you up to date on what's happening in the St. Louis housing market. Let's jump right in with some real estate news and information from St. Louis's best local source for St. Louis real estate news and information, stlouisrealestatenews.com. Here's just a few of the recent headlines from St. Louis Real Estate News. A recent report showing that in spite of some improvements in mortgage delinquencies, foreclosure inventory still remains a near all-time high. A helpful article from a local building inspector that was just published during our drought here, talking about how watering your lawn could actually prevent a leaky basement. Article on illustrating the St. Louis home prices were falling, but the rents are on the rise. Good news for investors. Another helpful article from a St. Louis mortgage banker in a common situation, what to do about a low appraisal, something that's happening quite a bit on deals today. And finally, a little bit of, I guess, upbeat news, results of a survey that showed that by and large, economists are in agreement now that home prices will hit bottom in most parts of the country by the end of this year. Now let's jump right into the real estate market data itself. The first few slides here are for the St. Louis metro area, so about 17 counties, about 9 of which on the Missouri side of the Mississippi and 8 on the Illinois side. And you can see for the entire metro area, the median price, current list price, is $190,252. That's up a little bit from last month. The most expensive listing jumped. It was $7.2 million. Now it's $12 million. So there's something big and fat out there. I'm not going to go through all the stats here, but you can go through those and see a lot of other interesting stats. And we'll jump down here to our market action index. This has dropped since last month from 17 to 16, and unfortunately the market's just not able to keep the steam going, to keep it moving upward. As a quick reminder on the market action index, a 30 would be a balanced market, not favoring buyers or sellers. As it goes above 30 up to a high of 60, the higher it gets, the hotter it is, the more it favors sellers. And as it goes below 30 down to 0, the lower it goes, the colder it is. So the market got a little colder in the last month. Now we're going to look at the history of the market action index since we introduced it back in 2009. And this is for the St. Louis metro area as a whole. And you can see where it's bounced around. Now while it's down, we're coming off our peak. It did peak back in late winter, early spring. We had kind of an early spring market, so it peaked there, hitting up in the 18 range, but then has been dropping. This is the same chart, shows the market action index for 4 quartiles for breaking the market into fourths, the most expensive down to the least expensive fourth of the market. And basically the market is, or the lines here are shown in price order. It just so happens that the lowest priced homes, the bottom quartile, the blue line here is on top. It's got the highest market action index, so it's got the healthiest market at 17, although it's not that healthy. And then as you come down here, till you get down to black, the black would be the top 25% of the market, so the most expensive homes, and that's down to about 12. So the lower priced market is performing better than the higher priced market. This shows what the trend has been for St. Louis, the St. Louis MSA median prices. The orange line is a 90-day average. The black line is a 7-day average. So the 7-day average is a little quicker to show a change, while the orange line shows a long-term trend. And we can see what's happened here over the past year with home prices. Have dipped down and actually climbed up to where they above where they were a year ago. And we can see from the 7-day average here, it took a sharp turn down here recently. So that if that continues, it's going to be indicative that we've probably hit the peak here for the time being. Now we're going to zoom in to the core St. Louis market, where the bulk of the real estate activity is on the Missouri side, and that would be the 5 counties of the city of St. Louis County, St. Charles County, Jefferson County, and Franklin County. So the remaining slides I'm going to show, and the data I'm going to share, is comprised of data for those 5 counties combined. This first slide here shows the number of sales and average sales price over this 5-county area for the last year. And you can see the blue bars here represent the number of sales, and you can see here that June actually finished up a little bit from the month before. And if we go back, I said this for the past year, it's really for the past 13 months, so I also showed June of 2011 over here on the left. And back in 2011 there were 2,870 sales for the month, and this year in June 3,032 sales, so about 150 more sales this month than a year ago. And we can see the green line is the average sales price, and again it's slightly higher too. Last year this time was 161,000, now it's at 169,000, so that's encouraging. This next chart here shows the median home sales prices and the days to sell. So the last one had average sales price. Median's a little more active, and it also shows how long, or accurate. And then this chart also shows how long it's taking the median time to sell a home. The red line is the days to sell, and the yellow line's pricing. And we can see on the prices what they've done, and you can see with the yellow line we've ended up a little higher this June than we were last June. Last June the median home price was 125, this year 132. And you can also see on a positive note, the days on market has declined a little bit. Last June it was 68 days, and this past month 63, so once again that's encouraging. Now this is what I call my realtor scorecard. This chart shows the ratio of the sales price, so what the home sells for versus what it was listed for, both at the time it sold and then also as compared to what it was originally priced at, so before price reductions. And what this shows is just how good a job, how good a market data the agents have, and how well they're using it, these listing agents, to help educate sellers and show sellers what their homes need to be priced at. In the past I've been critical of this because it's been horrible. In the past we've seen a lot of homes selling for 90 to about 92% of what they were originally listed for, which means they were severely overpriced when they started out, which meant the realtors were doing a bad job. Now it's getting better, so it's impressive here. We probably have more realtors watching this market video and getting up to the date market tools to help educate sellers. That must be what it is. So seriously here though, we can see that for the past month here, it was actually at about 90, almost 97% actually. Homes are selling for about 97% of what they were originally listed for. And I'm sorry, that's the yellow line, I'm pointing to the wrong one. And they were selling for about 94% of the original list price. So still showing a lot of them are coming out there overpriced, but doing much better than they were before. And we can see that again, this the fact that they're selling for almost 97% of the current list price is somewhat encouraging too. Finally here, not finally, but now we have the listing inventory. This shows the month's supply of homes that are on the market, so at the present sales rate, how many months supply do we have if not another house hit the market. And you can see what this line has done. It's actually heading the right direction. It's going down. Presently we're just about at 6 months, a little over 6 months supply. This time last year in June we were at almost 8 months supply. So again, that's going the right direction. A lot of these charts are showing we're moving the right direction, just albeit kind of slowly. And this one here is a 10-year chart. So this goes back over the last 10 years and looks at the median sales price, which is the green line, and the median list price, which is the blue line. And we can see over the past 10 years, I guess the sad thing is we're pretty much in the range of where we were about 10 years ago. So not much gain there. And in fact, on the sales prices, the sales prices are actually at about 118.5, give or take, is about what this level is here. And 10 years ago it was 127.5. So the sales prices, that's down over that 10-year period. Now the interesting thing is, again, sellers aren't catching on, and listing agents need to be better informed. Because in that same period, the median list price went from 134.9 back 10 years ago to 139.9. So houses are selling for less today than they were 10 years ago, but they're listed for more. So what does that tell you? All right, and this is just this is the tip of the iceberg. We have so much at More Realtors. We have so much data, just up-to-date market data and charts and graphs and tables to really help our agents interpret it and also help them illustrate it to you, whether you're a home buyer or seller, an investor. I'm telling you, everything we have is second to none in this regard. We have that's why we're a frequent media contact by the local media for market information and news. And that's why a lot of realtors throughout the area rely upon us for market data. So here you'll see our leadership team. There's me down in the corner, my partner John Williams, and our partner Nick Seapack. And again, we have a ton of data like this available. We can bring things down to your neighborhood. And also in the upper right-hand corner here, you see a newsletter that we have. I'd highly recommend you subscribe to our newsletter. We've got an electronic newsletter. It comes out once a month. It's filled with some market data, some charts and things. Easy to get your, take a quick snapshot of the market. It has some real estate news and information. It's got some helpful resources. It's good stuff. You can subscribe to it on our website at mo-re.com, or you can subscribe to it on stlouisrealestatenews.com over on the right-hand side. And for this market update video, you'll find this in a few places, but here where the arch is, you'll see you can subscribe to our iPodcast or our podcast, which you can find on iTunes by going to the iTunes store and searching St. Louis Real Estate Market Update. You can also catch this video on our YouTube channel at youtube.com/morerealtors, or you can catch it on our website at mo-re.com. I want to jump ahead here to this page. We've got a QR code over here on the right that if you scan that, that'll take you to a page with a lot of resources for buyers and sellers. And also I'd like to introduce our newest addition to our family, if you will. And this is from our premier team, our St. Louis home team. This is the new website they have out there, a real estate property search site, and much more. It's at stlouisrealestatesearch.com. I highly recommend you check it out, stlouisrealestatesearch.com. If you go there, you'll find it's easy to search for homes for sale. What you don't see on this page here is down on the right-hand side, there are links to just about everything you'd want to search for. You don't even need to enter in criteria. If you're looking for foreclosures in St. Louis County, just click on it. If you're looking for luxury homes in Frontenac, click on the link. It's a very easy site to navigate. There's a ton of market data there. You can see charts and tables and graphs to illustrate about everything you might want to know about the real estate market. So I'd invite you to check that out. I'm going to jump ahead here to keep the lawyers happy. Here's a little legal disclaimer. Basically says, hey, if you don't like what we're giving you here, we'll refund your money, but don't sue us. And there you go. So I'm going to go back to this. And so there you have it. I hope you continue enjoying the summer, and I'll see you next month. God bless you.